morning, everybody. Welcome to the Movie Markets Podcast. It is Tuesday, September the 9th, 2025. U.S. stock market has been open for just over 30 minutes right now, so we're in the very earliest part of our trading day. We're off to an okay start in the market. I want to try and not repeat the same kind of language I always use. It's tempting every single day to say, oh, we're off to an interesting start. There's not a lot going on right now. The Dow Jones Industrial Average is up a little bit. The S&P up a little bit. The NASDAQ up a little bit. But I would say all in all, these markets are pretty darn flat to start things out today, with a couple of, as far as the stocks that we watch specifically, you've got a really mixed bag. You've got AMD is up a little bit, CrowdStrike down a little bit, CoreWeave having a nice day, up almost 10%, Home Depot down a little bit, Microsoft up a little bit, NVIDIA down a little bit, Palo Alto Networks down a little bit, Palantir up a little bit. It's just kind of a mixed bag in terms of what we've got going on. I think I left off of there Apple and Airbnb, both down a little bit, although Airbnb is down a penny. They're awfully close to flat. So it's, even though the indexes are managing to be ever so slightly in positive territory, I would call these markets very, very flat. And they're going. You never know if momentum could really get going in one direction or the other. It's always a possibility. You always have that chance that something really gets on a roll. Some middle of the day news breaks. There's always that chance that something happens that you don't expect to have happen. But barring something really unexpected, I think everything finishes kind of flat today. Just as we were coming online, the Bureau of Labor Statistics did a major revision to the jobs numbers from the previous year. Let me see if I can get some details on that on one of these sites that I frequent. Jobs revision 911,000. I believe that is. I honestly can't tell if that's an upward revision. I think they would have a negative sign in front of it. I just saw that flash across my TV screen. See if there's any kind of a headline. Job growth revised down by 9. Okay, it was a downward revision. That makes more sense to me. I didn't really think we were looking at a positive jobs revision, but when it just said 911,000, I couldn't tell for sure, but definitely a downward revision. And I believe that's from April of last year through March of this year. And I also believe, and let's check real quick, I don't know if I'll remember exactly what this number was before that news broke, but I think that's going to move the needle a little bit on the Fed fund watch and probably move us more in the direction of, it's already, the betting market is 100% that there will be a rate cut. I wonder if it's going to move it, this won't refresh now, I wonder if it's going to move it in the direction of a greater likelihood of a 50 basis point cut, or the information won't refresh. Probably the system is being a little overwhelmed right now with people trying to get on. Of course, I might be having a little bit of an internet issue because I can't get, it says a timeout occurred. I can't get anything to refresh here. Maybe that's my internet on my side of things. There you go. It moved the needle a little bit. Okay, sorry that took so long to refresh. This was at 92 earlier, and this was at 8. So this is now at 90, and this is, for all intents and purposes, 9.9. It's at 10. The Dow moved into negative territory briefly, back into positive territory now. And I believe I saw that the NASDAQ might have moved just slightly. Well, the NASDAQ for a couple of seconds moved into negative territory, back to positive territory. I don't think that revision was unexpected. I personally thought we were going to get a revision and thought that it could be as high as $1 million. The last time we got one of these big yearly revisions, it was 800 some odd thousand. and you remember Trump railed about it a little bit. This was back when he was campaigning. So it can't be a shock to anybody that we got this downward revision. It is absolutely archaic how they collect these numbers. It's I don't know. I heard recently, and I was a little taken aback by this, although I think it wasn't the first time I heard it. It was just a stark reminder on these jobs numbers. The Department of the faxes to companies. Think about that. They still send these major companies faxes, want someone to fill this stuff out by hand and fax it back to them. That is absolutely ridiculous. I heard that of the companies that get these requests to fill out this survey to give us an idea of where the jobs are coming and how many jobs are coming, I heard that it's barely 1% of them that respond. Or I might be wrong, but some ridiculously low number, no more than a couple of % of them that actually respond. So the process is archaic. It needs to change. It needs to be fixed. So I'm not surprised that there's a downward revision of 911,000 and that the numbers throughout the year are off by that much. I don't think it's going to move the needle a lot today because I think it just keeps us on pace for very likely 25 basis point cut, possibly a 50 basis point cut. Now, I'll tell you what will move the needle much more. What will shift this from being much more in favor of a 25% cut and more in favor of a 50% cut. What's gonna shift that needle is if tomorrow on the CPI and Thursday on the PPI data, if those numbers come in somewhat tame. They don't necessarily have to be below, I guess it's PPI and then CPI. They don't necessarily have to be below what the consensus is. If they come in line with the consensus, you're going to get this thought that inflation is somewhat tame. You would like it to be coming down farther. We'd like it to be better than what we're seeing. But if it stays around that 3.3%, if the month over month isn't any higher than that, those numbers coming in somewhat tame may increase the chances of a 50 basis point cut. If those numbers come in hot, and I suspect they're actually going to come in a little bit hotter than expected. That's my expectation, is that they're going to come in a little bit hot. If they do come in a little bit hot, then I think we still get a 25 basis point cut, but no more than that. Jeff asked a really good question about one of these stories that is leading. In fact, it's the lead story. There could be a potential tariff refund of $1 trillion if the Supreme Court overrules Trump on his ability to impose these tariffs. I'm torn on this one. So let me give you my opinion of what will happen. This will shake the markets. If the Supreme Court rules against Donald Trump, I believe it will shake the markets, and I believe you'll see a market correction at the very least. Probably a couple of days of steep downward movement, and then maybe a correction down to as low as the 4,400 and something on the 44,000 something on the Dow. I think that is more. Actually, I think maybe down to 40,000 on the Dow. I think you could see 10% or more in the way of a correction if that happens. I suspect the Supreme Court, and then you're going to get the opposite. If the Supreme Court comes down in favor of Trump and we don't have to give that $1 trillion back, I actually think that boosts the market. I think you could see a leg up on the three major indexes as a result of that. What I think is going to happen is I think the Supreme Court is going to do something similar. I think they're going to do something similar to what they did with this whole, remember, what was it? Has it been 2 months ago now, 2.5 months ago, that the Supreme Court basically said district level federal judges cannot impose nationwide injunctions because they're out of their lane. It's too broad for them to impose nationwide injunctions. They can impose injunctions on executive orders and other things that the government does for their district, or they can hear a class action suit if it actually gets filed and goes through the proper channels of being a class action. I wish the Supreme Court would have been more definitive on that. They, in my opinion, they waffled. They sort of tried to play both sides, and they sort of tried to play both sides and say, you can't do that. I bring that up. This is a very different case. This doesn't have to do with which court it was or whether it was a court that shouldn't have jurisdiction over this. The reason I bring that up is because I don't like what the Supreme Court did in that ruling. I think they should have been more definitive. I think they should have said. I personally believe they should have reined judges in more and said no and smacked them down and said, if you are a federal, a district federal judge, you can do things for your district and your district only, full stop. I think it should have been no caveat in there. I think they should have left out the unless it's a class action thing, unless it's this, unless it's that. It should have been, you have jurisdiction over the district that you are assigned to, and you cannot impose anything ever that falls outside of your district. If someone wants to bring a nationwide class action suit, make it go up to a higher court. And if that's the Supreme Court, so be it, because that would be a long and lengthy process, and you get rid of a lot of frivolous class action lawsuits. So that's what I wish they would have done. I bring that up because I think the Supreme Court is going to waffle and not give enough clarity when they make this decision on what Trump and the administration can or cannot do in tariffs. I think they're not going to give decisive information on saying, no, the President of the United States absolutely cannot impose tariffs without the express pre-approval of Congress, or they're going to say the president can do it, but he has, after he proposes the tariff, it cannot go into place until it goes through Congress. I personally think what the Supreme Court is going to do is muddy the water. I think they're going to make the situation worse, not better. I don't think they're going to say the president has no ability to impose tariffs and that we have to give back $1 trillion in collected tariffs. I think they're going to be just slightly ambiguous. I think they're going to be just ambiguous enough to make it a worse situation. That's my fear, at least, of what's going to happen. Yeah, and I know on the federal court judge, I know Democrats and Republicans both shop for a judge that will give them a ruling they want and temporarily block something until it moves its way up the course. I don't like that either side can do that. I really don't. I don't like it any more that the Republican Party has done that in the past than that the Democrat Party is doing it currently. I really wish the Supreme Court would have come down and said, you are a federal court judge over this district. And if this district happens to be Florida and part of Georgia, you don't get a rule on anything at all that takes place outside of your district and pertains to people living in your district. You are out of your lane when you're doing that. And I'm saddened that the Supreme Court wouldn't do that. So anyway, Jeff, it was a good question. I don't think they're going to come down on Trump's side, but I don't think they're going to come down completely against him. And I think it's going to make what is already an uncertain thing. I don't think they're going to give us much clarity. I hope I'm wrong in that. I hope whatever the Supreme Court does, I would rather see them definitively say that the president cannot impose these tariffs without the approval of Congress and that it has to go through Congress than to leave it super ambiguous. I would, even though my preference would be that they say, yeah, the president has to have the power to do this because he has to be able to negotiate with these countries. He has to be able to use this as a tool, as part of the overall bargaining tool, which is the way Trump has tried to use it. I hope he retains or gets the power to do that, because I think he's doing it effectively. And Congress will screw it up, Republicans and Democrats. Democrats. Congress will screw it up. They'll absolutely, that's the one thing you can count on Congress doing, is anything that they have the ability to screw up, they will screw up. That is, I know that's a strong opinion, but I believe that of both Republicans and Democrats. If they are given the ability to screw it up, they will screw it up. So anyways, that's kind of where I'm at on that. But we'll see. I don't have much else to talk about today. I am going to do adjustments for Ford. I think Palantir, Snap. There's one or two other. There's a couple of collar trades that we have expiring options on at the end of next week. I'm going to adjust those today and tomorrow. They might not all come today, but today and tomorrow, those will get adjusted. And right now, all of our open spread trades, none of them look like they're in trouble. We got to watch, if you're still in Microsoft from the triple play side of things, we got to watch Microsoft really close, because Microsoft is trending back up, and we don't want it to go too far up. We're still way out of the money with a bear call spread, but I really don't want to see it get too close. And they're on their second day in a row of some upward movement. Not in jeopardy of a technical crossover right away, but we just got to keep an eye on that. And I'll bail out. I'm not going to adjust that trade again. I'm going to bail out of it if it starts going against us. Otherwise, everything looking pretty good right now. All right, I'm going to wrap up right there. I'm excited to see everything that goes on with Apple today and how that affects our new trade. By the way, I got into the Apple trade. Hopefully you got in as well. Mine's just dead flat right now. If you didn't get in yesterday, you should still be able to easily get in, because it's trading right at the price that we set as our limit order. So it should be a pretty easy fill if you didn't get in yesterday. Other than that, I think we're set. I'm going to wrap up right there. We'll see you back here live tomorrow about 30 minutes after the open of the market. Thanks, everyone. Bye-bye.